As property investors, we're always looking for those undervalued locations where you can still buy affordable properties with good growth potential in the future. So after reviewing over 4,000 suburbs across Australia, today I'm going to bring you 3 really undervalued suburbs that we love the look of down in Melbourne, where you can still buy properties for sub $700,000. Now let's kick it off with number 43 Stretton Drive in Brookfield, Victoria. This property was sold on the 27th of May 2025 for just $690,000. Being a beautiful, low maintenance, low set brick and tile, slab on ground, 4-bedroom, 2-bathroom, 2-car garage house, sitting on a massive 684 square metre block of land. This is an incredible buy for sub $700,000. Brookfield's a suburb that's located about 40 kilometres northwest of the Melbourne CBD as you head out towards Ballarat in that Melton region. With a vacancy rate below 2% and a median house price sitting at $550,000 with a median rental return of $450 per week right now, this area is super undervalued in the grand scheme of things. Now what I mean by that is after looking at over 50 years worth of property performance in Melbourne, we notice that the average property generally increases by about 9.5% per annum. But out in Brookfield over the last 10 years, properties have gone up by just 5.13%, making this area chronically undervalued based on historic growth levels. This would be a great property for those first or second time investors that are looking to crack into the market, that intend to hold the property for the next 10 to 15 years and want to get good capital growth, great cash flow, and even some depreciation benefits. Next up, we've got 24 Langdon Drive in Wyndham Vale, Victoria. Now this one's a little similar, but also very different as well. It's similar in the sense that you've got a nice low maintenance 4-bedroom, 2-bathroom, 2-car garage house. However, it sits on a 350 square metre block of land, so about half the size of the property that we previously looked at. Now what I love about this property is it presents extremely well. It's got a huge internal floor plan, and even though it's on that smaller block of land, it allows you to buy in a suburb that's a lot closer to the CBD in comparison to Brookfield that we just looked at, where Wyndham Vale is just 31 kilometres as the crow flies in the southwest of the Melbourne CBD. And the fact that this property recently sold for $675,000 just blows my mind, because the rental appraisal on this property is meant to be between $600 and $620 per week. So you can get an incredible rental yield if you're willing to buy the big house on that smaller piece of land in Melbourne at the moment. Now Wyndham Vale is a newer suburb down in that southwestern corridor of Melbourne. It's kind of on the way down to Geelong there, but still only 30 kilometres from the city and just neighbouring Werribee, where you've got all of the infrastructure and amenities that you want. But what I love about this area is the average household income is almost $1,800 per week at the moment. There is only 31% renters that make up the suburb, and people are only 31 years of age. They're in their prime working careers. They're obviously earning a good amount of money, more than the Australian median average at the moment, and there is predominantly owner occupiers that make up this suburb. Now if you were to look at this exact same property in Sydney, it would be worth significantly over $1 million at the moment. So Melbourne's so much more undervalued than Sydney right now, where history suggests that the difference should be somewhere between about 20% between the median house price in Sydney versus the median house price in Melbourne. But right now the gap is more like 40%. So it makes it look chronically undervalued at the moment. Now the third property that we're going to look at gives us a little bit of alliteration, so this one's going to test me. It's number 45 William Wright Wynd in Hoppers Crossing in Victoria. Now it's a slightly older house, being 3 bedrooms, 2 bathrooms with 2-car garage, sitting on a 530 square metre block of land. So it's kind of halfway between the last 2 properties that we've looked at today. And even though it's a little bit older than the last 2 properties that we looked at, it's still a really low maintenance and tenant ready property. As you look through some of those photos, you can see that nothing is required to get some tenants in this property and start generating some rental income. Now what blew my mind is this property sold for just $632,000 on the 27th of May 2025, so significantly below that $700,000 price range that we're looking at today, and you got a lot of opportunity in Hoppers Crossing right now. Now this suburb's the closest one to the CBD that we're looking at today, being just 25 kilometres. Now Hoppers Crossing is a bit of a unique suburb. If you do look at it online, you will see some negative information about it because it is a suburb of 2 different areas. There is a really nice pocket where there's predominantly owner occupiers and really nice homes, but then there is a lower quality pocket where you may see some slightly higher crime rates. But being just 25 kilometres from the Melbourne CBD, I can see this suburb gentrifying over time and becoming really sought sought after and desirable. And there's still only 25% renters in the suburbs, so 75% owner occupiers, and people are earning almost $1,600 per week out there at the moment, so more than enough money to pay for the median rent of about $460 per week. Now, when I was reviewing the suburb data for Hoppers Crossing, I realised that the vacancy rate is currently sitting at 1.04%, meaning it is chronically undersupplied from the rental market side of things at the moment. And generally when we see such low vacancy rates, we see those rents slowly start to increase. So once again, for those first or second time investors that have got a slightly lower budget and are looking to get into the Australian property market for less than $700,000, Hoppers Crossing could be a great area. Just make sure you're doing your due diligence and not buying in those lower quality pockets of the suburb. Now, as we all should know, property markets around Australia move in cycles, which means that there's good times to buy and there's bad times to buy in certain markets. Something that we all want to look at is the 10-year growth rates in these suburbs, knowing that a market like Melbourne has gone up an average of 9.5%, Sydney 9.6%, and Brisbane 9.7%, with Perth going up by 8.2% over the last 50 years according to the data from Homely. If you're looking at a suburb and you're looking at that 10-year growth rates, if it is anywhere below those longer term averages, it typically means that that suburb is undervalued and may have some short-term growth potential. While there's been some headwinds down in Melbourne over the last 5 years with COVID, with a lot of people moving away from the city and some bad tax reforms for investors down there, it has been a market that most investors have wanted to avoid over the last 5 years. But now, according to CoreLogic, the market has bottomed out and is increasing in value and is starting to become one of Australia's most sought after capital cities. We're seeing a lot of investors take their profits from Perth, from Adelaide, and sometimes Queensland, and going down to Melbourne, the big capital city with over 5 million people that live there, one of the most economically diverse capital cities that we have in the country, plenty of employment opportunities. It's attracting the highest number of international immigration right now. They are not building enough properties for the amount of people that are moving to the area at the moment, and the government is spending billions and billions of dollars on upgrading the infrastructure projects to make this city more livable, to make this city more connected. I think it's chronically undervalued right now, and I'm excited about the next 5, 10 or 15 years down in Melbourne. Now, whilst nobody has a crystal ball and nobody can predict the future, when we analyse the history of the Australian property market and when we analyse these suburbs against a set of key performance indicators, we can do our very best to reduce our risk, to buy in the undervalued locations where we do have a higher chance of seeing some capital growth in the short, medium and long-term future. These are 3 suburbs that I'm super excited about, to the point where I might be thinking about buying something down there myself over the next couple of years. But either way, guys, we just want the best for you, and dive into a little bit more research on these suburbs and let me know your thoughts.
G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just wanted to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.